Hello friends. As we know, we need to pay tax sooner or later. If we are not paying in time, then IRS imposes penalty. Let us learn what is estimated tax. What is underpayment of IRS dues? What is underpayment penalty? And how we can avoid it. Disclaimer: accuracy-related penalties. Any tax advice in this communication is not intended or written by us to be used, and cannot be used, for the purpose of avoiding penalties that may be imposed by any governmental taxing authority or agency, or promoting, marketing or recommending to another party any matters addressed herein. The opinions and analyses expressed herein are subject to change at any time, as are statements of financial market trends, which are based on current market conditions. Any suggestions contained herein are general, and do not take into account an individual's or entity's specific circumstances or applicable governing law, which may vary from jurisdiction to jurisdiction and be subject to change. Any third-party information contained herein is from sources believed to be reliable, but which we have not independently verified. Past performance is not indicative of future results. Investments in securities may lose value, and fees, charges, and taxation can have an adverse effect on investment returns. This material is not intended as an offer or solicitation for the purchase or sale of any financial instrument. No warranty or representation, express or implied, is made by Shore Financial and Tax Services LLC, nor Shore Financial and Tax Services LLC accept any liability with respect to the information and data set forth herein. Distribution hereof does not constitute legal, tax, accounting, investment or other professional advice. Recipients should consult their professional advisors prior to acting on the information set forth herein. For your individual case, schedule a consultation by visiting https://shorefintaxsvs.com/contact/. What is estimated tax? What is estimated tax? Individuals, including sole proprietors, partners, and S-corporation shareholders, generally have to make estimated tax payments if they expect to owe tax of $1,000 or more when their return is filed. Corporations generally have to make estimated tax payments if they expect to owe tax of $500 or more when their return is filed. Visit www.irs.gov to calculate estimated tax due by using IRS Withholding Tax Estimator. Refer Publication 505, Tax Withholding and Estimated Tax. For estimated tax purposes, the year is divided into 4 payment periods. You may send estimated tax payments with Form 1040-S by mail, or you can pay online, by phone or from your mobile device using the IRS 2Go app. Visit irs.gov/payments to view all the options. For additional information, refer to Publication 505, Tax Withholding and Estimated Tax. However, you don't have to pay estimated tax for the current year if you meet all 3 of the following conditions. You had no tax liability for the prior year. You were a U.S. citizen or resident for the whole year. Your prior tax year covered a 12-month period. What is estimated tax? Once you determined estimated tax, ensure that your withholding tax plus previous estimated tax is 1/4 of estimated tax by April 15th, 1/2 of estimated tax by June 15th, 3/4 of estimated tax by September 15th, and 100% of estimated tax by January 15th, next year. What is underpayment penalty? What is underpayment penalty? If your tax due is more than as stated in previous slide, then you are liable for underpayment of estimated tax. If you didn't pay enough tax throughout the year, either through withholding or by making estimated tax payments, you may have to pay a penalty for underpayment of estimated tax. The underpayment of estimated tax by individuals' interest penalty applies to individuals, estates and trusts if you don't pay enough estimated tax on your income or you pay it late. The penalty may apply even if we owe you a refund. How to minimize underpayment penalty. How you can avoid underpayment penalty. Generally, most taxpayers will avoid this penalty if they owe less than $1,000 in tax after subtracting their withholdings and credits, or if they paid at least 90% of the tax for the current year, or 100% of the tax shown on the return for the prior year, whichever is smaller. There are special rules for farmers, fishermen, and certain higher income taxpayers. Please refer to Publication 505, Tax Withholding and Estimated Tax, for additional information. The penalty may also be waived if the failure to make estimated payments was caused by a casualty, disaster, or other unusual circumstance and it would be inequitable to impose the penalty, or you retired after reaching age 62, or became disabled during the tax year for which estimated payments were required to be made or in the preceding tax year, and the underpayment was due to reasonable cause and not willful neglect. How you can avoid underpayment penalty. Taxpayers can use following forms to adjust their withholding tax by submitting following forms to the payer. W-4 Employees Withholding Certificate. W-4P Withholding Certificate for periodic pension or annuity payments. W-4R Withholding Certificate for non-periodic payments and eligible rollover distributions. W-4S Request for federal income tax withholding from sick pay. W-4V Voluntary Withholding Request. When you need to adjust your withholding tax, following changes will result current withholding less than your tax liability. Change of lifestyle. Marriage, divorce, birth or adoption of child, purchase of a new home, retirement, filing Chapter 11 bankruptcy. Change of wage income. You or your spouse start or stop working, or start or stop a second job. Change in the amount of taxable income not subject to withholding interest income, dividends, capital gains, self-employment income, IRA, including certain Roth IRA distributions. When you need to adjust your withholding tax, following changes will result current withholding less than your tax liability. Change in the amount of adjustments to income IRA deduction, student loan interest, deduction, alimony expense. Change in the amount of itemized deductions or tax credits, medical expenses, taxes, interest expense, gifts to charity, dependent care expenses, education credit, child tax credit, earned income credit. At Shore Financial and Tax Services LLC, our team of skilled professionals, consisting of licensed and experienced tax consultants, truly believe that each business should receive individualized attention. It is our passion to help your business grow and flourish because we understand that the relationship between an accountant and their client is truly symbiotic.